What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking all about 5 stocks on my watch list, 5 stocks I want to buy. Some of these I do own, but all of these stocks I would really like to buy. We're also giving you guys an update on Mindmed. Just a quick update how it traded today for all my Americans. It is Thanksgiving, so happy Thanksgiving to all my Americans. Without further ado, guys, let's get straight into the video. Before we do that, though, the last thing I gotta say is if you do support me in the channel and all the videos, then kindly explode that like button. I've noticed way more views, way more comments, likes, and it's been really nice. I do think that it's a big part because of the shout out that Daniel Pront gave me. He was awesome, and I've seen a lot more life back in the channel, so I wanted to thank him once again. Also, I heard that Rich TV Live mentioned me on his live stream, so big shout out to Rich TV Live. We've worked together for a while. Anyways, guys, last thing I wanted to say was, if you do like constant daily coverage on the markets, all the interviews that we do, then of course don't forget to cash that subscribe button and ring the market bell for notifications. And let's get straight into this video. So the first thing I wanted to say, these are your market minutes. So we're going to talk a little bit about the news. We're going to do comment of the day. And we're going to be talking about the new video that we're going to be posting on Departures stocks. Departures stocks has been growing like crazy over the last little while, and I wanted to thank you guys. So tune into Departures stocks. We're going to drop a video, 3 stocks to buy for December. And I'm going to do a little bit more research on these companies, give you guys a little bit more thorough opinion. 3 very interesting companies, so tune into Departure stocks. I also wanted to say, before we get into comment of the day, that we did interview Peter Grandich, and it was a fantastic interview. We're actually going to include a couple of the questions regarding gold and commodities and uranium in this video. Just a couple clips, but you can check out the full interview on the channel. It's the last video that we posted just 5 hours ago. Now, Peter is awesome. He's an author. He wrote the Wall Street Whiz Kid, predicted the 1987 stock market crash, made millions of dollars in the stock market. He was one of the largest shareholders in Teranga Gold, and now he's, fully invested into gold stocks. So a really awesome, highly educated, very experienced man that we had the pleasure of connecting with through a Departure Stocks Uranium video. So check out the full interview if you guys want or get the chance. But now we're going to get into comment of the day. And continuing to make Doc's job easier. There was 95 comments, and I really want to cater to all of you guys. So we're just going to blow through the comments real quick. We'll spend a minute or two. 1 dislike from Jay, and we did in fact get 1 dislike, 198 likes and 1 dislike. Come on, guys. I mean, that's still not a bad ratio. So Brent Mace forced my dad to invest $10K in Mindmed last month. Should help pay him back for 10 years of rep hockey. So congratulations, buddy. And Mindmed did have a green close, although not a strong close. And we will be talking about the technicals just a little bit later on in this video and where I think Mindmed's going to go or how it's going to trade over the next, couple weeks. Note, if I'm not mistaken, from Brady Loneheart, they upsized their financing from 25 to 30 mil. Impressive close. Also bought more today. And we will be talking about that news in just 2 seconds. Thanks for the Mindmed coverage. No plans on selling anytime soon. I'm still up almost 3.5 times overall. Congratulations, David. Jess, I bought more Mindmed on the dip and some Numi at 60 cents. It was a good day. And you're laughing. Today was a really great day for Numi and an even better day for Midison Innovations. So the stocks continue to roll. The River Life, holler at your boy, Numi. Mutant Ref, is that a beer in the mason jar next to the globe? And it was actually black coffee. But, beer might have made it a little bit more interesting. Andrew Felger made it to the end, thinking of getting into Mindmed. And we'll see how it trades over the next, little while. We're going to do 2 more comments. Jack Hall to the end. And big shout out to Jack Hall. He's one of our most dedicated long-term subscribers, has supported me from the start. Recently lost his dog, I believe. So, my prayers go out to you, my friend. And we'll make it through this together. So show some love for Jack. If you do see him in the comments, show him some love. And then last but not least, Benjamin, thanks for the video and amazing information. It's nice work. Champion, I'm investing in Mindmed since 30 cents. I'm investing since March in Champion Brands too. What do you think about Champion Brands? I think they need to get it together and start trading. Our regulatory agency is taking way too long. I think that stock needs to trade. And it's so unfortunate. There were some issues. I'm sure they're addressing them. They have addressed them. They put out multiple press releases saying that, they're getting close to trading. But it's in the hands of the regulators right now. So we just got to be patient. I own some shares in Champion Brands as well. So the last reminder about Departures stocks, guys, go to the channel, subscribe. Get this channel to 1,000 subscribers. We're almost there. We're now at 767 or 769 subscribers. So get us to 800 today or above that. Like I said, I will be dropping that video on 3 stocks to buy for December. So it's going to be an exciting video. And then last but not least, we will be talking about those 5 companies that I want to buy, plan to buy, hold some of them. But if you are interested in seeing our full public portfolio, all the trades I make, weekly private videos, we do have a full access insider program, $10 a month or simply $100 per year, and you get access to all of this stuff, all of this content that I've posted since inception. And I will be posting more trades into the group. I update it a couple times a week, and we have a really awesome Facebook community that loves to chat stocks. So take a look at our full access insider membership group, and let's get to the news. So obviously the US markets didn't trade, so we don't really have anything exciting going on there, but I will talk about gold a little bit. Gold is holding above 1800, so 1808.50, and we're seeing some really nice gains for the precious metal stocks. So I've got some exciting news when it comes to that. Silver down 0.24%, but gold is actually in the green. So gold's looking a little bit more in favor right now as opposed to silver. Now that key level to watch, guys, has been 1800. So as you can see here, guys, gold's struggling around 1800. Hopefully we can, hold this level. That's really what I'm looking for. And I have seen some, by the looks of it, some dip buying in the miners around 1800. That was my psychology. I was buying when gold dipped below 1900. And then it got to 1850, I did a little bit more buying, and then I got to 1800, and I did a little bit more buying, and I plan to buy in $50 increments. So if we do in fact reach 1750, I'll pick up a few more mining shares, and then finally 1700, that will be the cutoff for me. So far so good. We're going to take a look at a couple companies that have rallied actually very strongly today despite a very small move in gold and in silver. So before we do that, though, before we get into the gold stuff, I did want to talk about Mindmed because I'm sure you guys were waiting for Mindmed, and these videos have multiple topics in them. So if you're if you've tuned in for a specific topic, I always like to remind you guys, use the timestamps. Doc does a really great job there in the description down below. Use the timestamps if you want to get to a specific part in the video. But now let's talk a little bit about the chart for Mindmed. And I'm not a technical trader by any means, but I'm trying to identify a pattern right now when it comes to the Mindmed chart. And we saw that initial spike up on the news to 52-week highs of basically, I believe it's $2.59 or $2.60 Canadian. Now this is Canadian. Then we dropped off quite substantially and recovered that day to close around 230. Then we gapped down like crazy on financing, recovered fully, actually made it up into the green, tested 230 again, and then sold off. Today we tested 230 again and sold off. So by the looks of it, we formed this wedge. We were breaking out. It looked like it was a false breakout. And now we're trending down. So I think, if we can get some more positive news and Mindmed can get above this 229, 230 level, then we could see clear sailing onto fresh 52-week highs. However, if we don't break that level in the next little while and it continues to drift lower, I think we're going to find some support around $1.90/$2. It's a psychological level, and 190 is where they did the financing. So now we could also say that Mindmed looks like it's starting to, trend downwards a little bit until we reach some support somewhere around $2. I could see that being the case, although from here, it doesn't look like there's too much downside. So I wouldn't be surprised if we see some consolidation over the next couple of days, bouncing in and around $1.90 to $2.30 until we break out of this range one way or the other. I sure hope it's to the upside, but that's my thoughts on Mindmed, guys. So you can tell me what your thoughts are. If you're a super bull, if you're a super bear now that we've ran so much, let me know. I'm going to continue to hold and see where it goes. I really do think that we have the potential to get onto the NASDAQ. And, I'm looking at $5. That's kind of where my just personal price target is. Although, I'm not an expert. That's not financial advice. It doesn't mean it's going to 5. So please don't take it as financial advice. That's just simply where I think that, Mindmed's going to go. I would be happy, let's just put it that way, if we made it to $5. Seen so many companies take off and see those 5-10x returns. The Very Good Food Co., we saw that thing skyrocket like crazy. Grow Generation is another big winner. Neo, obviously. So many EV stocks have gone up like crazy. So we're in that type of environment. But I definitely think that, getting onto the NASDAQ is going to be a big part of that $5 run. So we'll see if we can get there, guys. Anyways, let me know your predictions. Let me know in the comments what you think. about, where Mindmed is going. I'd love to hear it. So now let's crush gold real quick. So for higher durations, gold can provide an effective hedge against the portfolio's sensitivity to changes in yields. This is evidenced by increases in portfolio duration beyond 2 years, which can give support to gold holdings above 10% of total FX reserves. So this whole article, gold plays an important role in central banks' foreign reserves, basically saying that, gold is still important as global economic conditions deteriorate. Zerka said that a 20 to 50% position in gold as a rainy day fund may be adequate in the presence of elevated yield sensitivity or exchange rate risks. So just one analyst's opinion. I have 3 more quick opinions on gold. It's all good news. Vaccine not to scuttle gold's current high, says ANZ. Even though gold is currently trading more than $250 off its record high, Australia and New Zealand banking group said something different. So after the initial sell-off this week, gold is now trading just above critical support at 1800, and that's a level that we've been following very closely. With the prospects of an imminent global illness vaccine, the likelihood of a strong global recovery and a rally in risk assets continues to improve. This could take some time to shine. This could take some shine from gold's safe haven appeal. We don't think it will scuttle gold's current rise either. They maintain a price target of $2,100 per ounce next year, which provides a very comfortable environment for a lot of the miners and the explorers. So let's continue. Gold prices to average $2,300 an ounce in 2021, says CIBC. In its 2021 outlook, analysts at CIB said they see gold prices averaging around $2,300 an ounce as the world continues to deal with the devastating economic fallout of this global illness. This global illness only served to accelerate our lower for longer rate outlook, which was the foundation of our bullish call at the beginning of 2020. So nothing has actually changed, guys. Right now, we've just seen a rotation into riskier assets, into value assets, basically, banking on the economy recovering and those high growth stocks continuing to run. But that will run out at some point, in my opinion. The market will get ahead of itself, and that's when I feel like, we're going to get some gains for gold. It's a long game here. We got to be patient, and I will just continue to be patient. The global illness turned the world upside down economically, with governments quickly injecting stimulus to stave off corporate and personal bankruptcies. So if you think this is the end of stimulus and we're not going to get any more, I think that's pretty crazy. So gold remains top commodity in 2021, oil at the bottom, CRU. And I just want to reiterate this. In a telephone interview with Kitco News, Paul Robinson, managing director at CRU, said that next year will provide enough volatility and uncertainty to support gold prices back through 2,000 an ounce for the next 3 to 6 months. So if you're looking at gold's rally and you're positioning yourself for some, gains in the mining stocks, which I am, I'm looking at 2021 for gold stocks to shine yet again. Now, in terms of how much of a gold bull I am, I'm a gold bull for sure. I think the gold will continue for the next couple of years and then trade in a range until we really see some type of, solid economic recovery. And hard to say, guys, but I will be looking to take profit in 1 to 2 years from some positions in the gold sector. But I will maintain, however, somewhat of a position just as an insurance policy. But 2021, 2022 might be the year where if the returns, there's some good returns, then I might take a little bit off the table. But for now, super long gold. Okay, guys, so with that being said, I wanted to get into our interview with Peter Grandich on gold stocks. We're going to clip it and give you guys the portion of Peter's opinion on why gold is a good investment. So hope you enjoy it. Obviously, a lot of my subscribers care a lot about gold and silver. I've been talking about it. I'm, of course, a gold and silver bull, despite being a millennial, which is kind of weird. But, do you think we're still headed for higher gold prices? There's talk, there's a pullback in gold. Is it going to keep going lower? How are you playing this market, and what do you think about these moves?
Well, you have to take appreciation that at least here on Wall Street, and I wouldn't be suspecting that it's the same thing in Canada and all over, for the most part, gold is kryptonite to the people in the financial service business. They're involved in financial assets, and normally if gold's doing really well, financial assets shouldn't. Now, that hasn't been the case this part of this year because it's such a unique year. But so you're never going to get the so-called Main Street financial service groups very high on gold, certainly. The second thing is it is something that sometimes is misunderstood. For instance, people would argue now, and that's why they're claiming its decline, that it was rising because of COVID and people were buying it. And now that COVID looks like it may be behind us soon, you don't own gold. Now, gold has risen, in my belief, mainly and will continue to because of the enormous amount of printing of money. Gold is an alternative to paper currencies. That's the first and foremost reason, in my opinion, why you want to own it. And if I couldn't own gold, there really isn't any other currency that I would like to own. And that's why I think it's another favorable situation for it. So, you know, pullbacks like this, especially after almost a parabolic rise this summer, I was just telling you before we started speaking that all the guys people that were saying not to own it at 12, 1400 now come out and say at 1800, you know, it's going to 1500 again. And then there's so many now weak knee bulls. And this has just been a dramatic shift in sentiment. If you just look at what people were saying a couple months ago, they were talking 3, 4, 5,000 any day now. And now we're talking about the gold market rally may be over. And that's the type of sentiment we're going to need if we are to go to large, higher prices. We're not going to go there right away. We're probably going to spend the rest of the year going sideways now because this was a fairly significant damage technically. And usually they don't get repaired in a day or a week. But I'm certain if the good Lord has me alive next year this time and you want to still interview me, we'll be talking about a gold price, you know, north of 2,000.
All right, guys. So let me know what you think about Peter. You know, I think he's an awesome guy. I think he's got a wealth of knowledge and he's a super commodity bull. Now, with that being said about gold, let's get into his segment on uranium and why he likes uranium so much. Apart from gold, I know that you're also a uranium bull. Can you tell us a little bit about, you know, uranium, why you're so interested? Because that's actually how we connected. I saw your video on Kitco about gold and uranium, and I actually made a video on uranium on Cameco. And then luckily you retweeted me on Twitter, so here we are. And yeah, so let's hear your opinion on uranium.
So in the 30-something years, I never was a uranium bug. In fact, I never really looked at it.
Yeah.
However, like you, I saw something over a year ago by somebody on the internet, and it intrigued me. I didn't realize, you know, I used to hear it. You know, I used to speak at all the major conferences. You know, I did your BNN and Rob when it was Rob TV, then BNN and CNBC, and every once in a blue moon, somebody would mention uranium, and there were a lot of false starts. Yeah. There were some known newsletter guys that over the years kept predicting this the next bull market, but it really went through a devastating bear market. And suddenly I looked at these charts that this person presented, and I said, wow, supply is way down, demand is going to go up, and there aren't a lot of people playing that game. It's the producers you can count on one hand. And I said, boy, I got to really look at this. And of course, I fell in the twilight of my career. The older you are, Aaron, the less risk you're going to take. So I decided for myself, at least, I would focus on the handful of known producers versus trying to figure out which of the exploration projects are the best and so forth. Doesn't mean I don't like junior exploration uraniums. But for me, it seemed like a no-brainer to own a couple of the producers. And of course, in Canada, the premier one is Cameco. And when we recently got to 9, I used a video, which I've learned to do now. I mean, I'm technology challenged still, even at this point. And I used a truck backing up because I just felt that $9, it was just insane. If you have any hope that uranium is going higher, I can assure you that these utility companies are going to want to make long-term contracts with companies that they feel confident that can deliver to them. And that's the one thing I think Cameco has over, you know, a junior that may hopefully be produced in the next couple of years and all. So again, I think, you know, you can almost throw a dart, but I will caution you, in the last bull market in, you know, 2006 or 7 when it was probably 500 uranium juniors. Yeah. And how many of them ended up actually developing a uranium mine? So keep that in mind if you're going to play the junior side of it. Doesn't mean that they can't double, triple, quadruple on a move up. But I think, you know, companies like Cameco, or if you want to take a little less risk, an ETF, URA, which has Cameco and the Kazakhstan major producer in it, which is almost half of the ETF, that could be even a more conservative way of playing the uranium price. I think you can only go up. And even if it doesn't go all the way up what we think, I don't think there's a 50 or 60% loss coming in them. That's still possible in the general stock market. So that's why I rather error on the side of uranium than, say, a general equity market.
All right, guys, so that's it for the interview with Peter. We did have an awesome full interview on the channel once again, so check it out if you do like what you see. That was kind of just a teaser, but I wanted to include that for anyone who might have missed the interview on the channel. And now let's get into the news for Mindmed and those 5 companies, and that will be it for the video. So Mindmed did in fact upsize their bought deal financing to roughly 30 million. So that's really nice to know that Canaccord is comfortable with buying shares at $1.90, and that escalation clause remains. The warrants do have a $2.45 price in terms of, where the warrants are for. So, and I also wanted to state that in the fine details, guys, a warrant acceleration rate exercisable by the company if the daily volume weighted average trading price of the company's subordinate voting shares on the NEO exchange is greater than $4 for the 10 consecutive trading days. So they've actually reduced that time, which makes me believe, if we get to $4, and it trades for $4 over 10, as soon as they initiate that, I would look for a little bit more volatility. We'll just put it that way. So anyways, guys, one more piece of news. How could I forget? I guess I just prepared all this stuff and couldn't stop talking. We saw a plunge in cryptos today, an absolute plunge. Bitcoin tanked like crazy. Ethereum was tanking. Bitcoin Cash down 30%. Ripple was down almost 50% at one point. Holy smokes, guys. Fear of regulation is moving in. Just what, $9 away from Bitcoin's high? Crazy. I mean, I don't know. I'm not a crypto bull, but we'll see what happens, guys. That's all I got to say. So let's get into those 5 companies that we're looking at, the reason why you guys tuned in. So the first one, of course, is Carebook Technologies. Now, for some reason, this quote is delayed because on Yahoo Finance, different story. The stock actually closed at $1.66. But why Carebook Technologies? Why do I like this company? Well, they focus on data, business to business. We're leading the digital health revolution. Built on a powerful health platform, we create highly engaging, customer-centric digital products for pharmacies, insurance providers, governments, businesses, and more. So look into the company a little bit more. I'm briefly just going to talk about them as we have made a full video already recently on the channel. It was a sponsored video, so check it out. We go in depth on their investor presentation. I did, in fact, take a position in this company. It was around $1.70, so I'm actually down on that position, potentially looking to add to it. But they work with a really big company called McKesson. Look at them. I think there's a lot of promise for this stock. And I wanted to get some exposure to the healthcare sector. I think the healthcare sector is drastically changing, and this global illness is just expediting everything. And we've seen stocks like, we've seen all these telehealth stocks run like crazy. CloudMD absolutely just took off. So this is in the healthcare sector. It's a stock that's pretty much health technology. So let's see what they do. Highly engaging, customer-centric products built on a powerful health platform. Businesses like yours are already effortlessly engaging customers, and patients be part of the future of care. Health assessment, screening, and surveys connect to virtual care, recommendations and education, preventative health and wellness, remote vital signs scan, medication adherence, health records, tracking, reminders, and communication. That is very, very important. And as you guys can see here, McKesson Canada, Rexall, and Midasys pharmacies are already effortlessly engaging patients. Learn more about the pharmacy engagement platform. Carebook for Pharmacy is exclusive to McKesson in Canada. So very, very big in Canada. So that's like my health growth stock. Now let's talk about a few precious metal stocks that I'm looking to add to. And I did add quite a bunch of discovery around $1.50 when we did dip to $1.50, and the charts are looking pretty good for this thing. It's been consistently making higher lows, and I really think that if silver does take off in the next couple weeks to couple months, this thing's going to break out, and I'm hoping to hit fresh 52-week highs. We saw 52-week highs at $2.84. We're still more than $1 off of 52-week highs, and at this time my average is now around $1.60. So I'm a big fan of Discovery Metals. I like who owns the company. Eric Sprott owns a gigantic position in this company, one of his biggest investments in the silver space, and they're sitting on a world-class asset. It's lower grade silver, but we're talking almost 1 billion ounces. So, or it may actually be over 1 billion, but basically in 2021, midway through 2021, they got a really substantial drill program going on right now. They're going to have an updated resource estimate, and when that happens, I think this stock will be revalued, and I'm hoping that it's worth a lot more than it is today. So that's my investment thesis on Discovery Metals, and I'll continue to accumulate if the stock, trades sideways under $2. I'm going to continue to accumulate. So next company, Wallbridge Mining, and this is another exploration play, more so focused on gold, but the stock has gone down, and they've shown really great drill results. Hasn't performed as well. Once again, the thing I like about this company is their strategic shareholders. We're going to take a look at their investor presentation real quick. They own a massive, massive chunk of land right beside Kirkland Lake's Detour Gold project. So if you're a fan of Kirkland Lake, I think that this is a really interesting stock that you should look at. And apart from what they actually have going on, which is a very substantial drill program in a very safe mining jurisdiction right beside Kirkland Lake, that's a $1 billion company. Kirkland Lake owns almost 10% of this company. So I just want to say, 2020 they've got a 100,000 meter drill program. Q3 2021, 150,000+ meter drill program. And they're focusing on their maiden mineral resource. So that's going to be extremely exciting. And then after that, economic study, PEA. So I think it's going to be very exciting. Exprod owns 20.7%. Kirkland Lake owns 9.9%. William Day Construction owns 7.1%. So that's just another exploration stock that I just want to add to, just because I feel like this thing has a lot of upside potential. I mean, traded at $1.35. We're down here at 78 right now. And I don't see too much more downside unless gold really tanks. So we'll see what happens, guys. The third company, and I had to include, a producer. So I included Fortuna for a couple of reasons. They're very close to producing gold, full scale, Q1 2021 at their new gold project, their Lindero gold project. So they'll have some nice gold production. They've got some great silver production already with a decent, couple year mine life left to capitalize on this potential incoming bull run in silver. So they're a silver and gold play. They're already a producer, and they are somewhat of an explorer as well. But I've been watching this stock for a very long time. Love the company. Biggest position in the silver sector. And they did sell off quite substantially from $10.50 all the way down to below $8. So I bought below $8. It's bounced a little bit, but I feel like Fortuna has the ability to and could potentially rally in the next silver run into the teens. So that's kind of where I'm looking at. I'm not looking for, double my money type scenario, although it could happen if silver went absolutely parabolic. But I'm not sure when and if that's going to happen. They do say that, we're getting into the fourth leg of the silver market. I was watching a video yesterday, and they say, usually that's a drastic, fast move up, but not a long move up. So we'll see if that actually happens. Lots of speculation. But look into Fortuna. I've stuck with the company for a very long time, and the last time I bought it was down at $2 in March. So haven't touched it since, and was happy to add below $8. So last but not least, guys, the fifth company, and this is totally different from all the other companies we talk about. This is a dividend stock, and I simply just want to talk about why I'm interested in Bell. Bell is the company. It's one of the largest telecom providers in Canada at $51 billion. It yields 5.85%, and it hasn't done that well since the whole crash. We saw it crash all the way down to $46. It's recovered to $56 now. Recently, we were as low as $53. But I still, I like the fact that it hasn't made fresh 52-week highs. The charts look like it still has a little bit more upside. And then if we can manage to get back to around 60, if we're in at 56, it's nice to have a little bit of a cushion while collecting that yield. Because realistically, you would just be buying this stock for the yield, at least in my opinion. I could find 1,000 other stocks that have more potential for growth as opposed to Bell, but I do like the dividend yield. So if I was looking at a dividend stock, telecom right now is essential. More and more people on their computers, on their phones, at home. I don't see this going away anytime soon, and they have a crazy monopoly. So Bell would be one of the dividend stocks that I would like to buy. I currently don't own it. I currently don't own any of it now, but if I was looking for a little bit safer of a dividend stock, I'd probably pick Bell. So anyways, guys, that's it for the video. I hope you enjoyed it. I tried to change it up, include some interesting things. Let me know if you made it to the end. I love to throw that in there. So thank you if you did. And always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.